And now, in studio, bringing his Midwest values from the Show Me State to the land of San Diego. He's a triple threat, licensed as an attorney, mortgage broker, and a top producing realtor who's crushing the competition. Here to deliver you what's happening in the trenches of the market. Your host, Michael Gaddis.
Welcome back to the Michael Gaddis Show on AM 1170 The Answer. I am your host, Michael Gaddis of FrontierLoanGroup.com. Before I get started, I want to talk, just do my little homework I have to do here, which is Frontier Loan Group, Frontier Loan Group, Inc. is licensed by the California Bureau of Real Estate, license number 01449152, NMLS number 345305. I, Michael Gaddis, am licensed by the California Bureau of Real Estate, license number 014-33800, NMLS number 280011. So, I want to talk a little bit about reverse mortgages. I know we've talked about this numerous times on the show, and I wanted to start by saying that I've been having reverse mortgage workshops up in Carlsbad, and they've been going over really, really well. One of the things I like to do at the workshops is I like to keep the workshops small. I don't like to have large groups of people, maybe 3 to 5 couples that might come in, or 3 to 5 individuals at a time. Keeping it smaller allows for a better dynamic with the workshops. Now, the workshops are extremely thorough in their analysis of what a reverse mortgage is, how it works, how it might be beneficial to you, and things you should be concerned about, or at least points that you should consider when thinking about a reverse mortgage. So I think that for those that attend, even for those that don't end up getting a reverse mortgage, I can guarantee one thing out of these workshops, and that's, if nothing else, you will know a lot more about reverse mortgages when you leave than when you came in. And, because of the enormous amount of misconceptions surrounding reverse mortgages, I think it's really important to educate people as to what they really are and how they really work. And the more you know if it's something that you or one of your loved ones can utilize. So the reverse mortgages that I hold, the workshops I hold, are usually on Thursdays at 10 a.m. However, we do have a few in the evening. The next one I have coming up is Thursday, January 28th at 10 a.m. in Carlsbad at my office. And I definitely suggest that if you are considering a reverse mortgage, or someone you know is considering a reverse mortgage, that you attend one, because it is one of those things. They're not overly complicated, but the way they work can come across as complicated. So what I like to do is simplify it and explain it, and see if it's something you might be interested in. So if you're interested in going to one of these workshops, feel free to contact my office. You could contact my office at 760-692-5950, 760-692-5950, or you can email me at michael@frontierloangroup.com. That's michael@frontierloangroup.com. So let's talk a little bit. What is a reverse mortgage? Let's get into that really quick, and then what we're going to do is we're going to talk a little bit about some of the pros and things to consider with a reverse mortgage. The first thing that you need to know is that a reverse mortgage is basically a unique type of loan available to homeowners over the age of 62 that have either paid off their home entirely or amassed a considerable amount of equity. Now, here's one of the things that I hear a lot from people. Well, reverse mortgages, if I get one of those, it's going to steal, any of the equity. My house is basically going to go to the bank and my beneficiaries are not going to get anything. That is not correct. Basically what a reverse mortgage is a negatively amortizing loan. Fancy words. Negatively amortizing loan. And what that means is that instead of making payments, basically the payments go into your principal balance. Now, I had a couple that came into my last workshop. They had a monthly payment of $1,700 a month. So they had to pay, $1,700 a month for their home. Their income was $4,000 a month, meaning that after they paid their mortgage, they had $2,300 left. they had 2 car payments for $800, which dropped that $2,300 down to $1,500. Then they had to pay for insurances, credit card payments, and living expenses. So you could see how fast that can go down. So every month they were having to pay that $1,700 a month payment, whether or not, whether it came out of their disposable income or whether they deferred it to their loan. Now, when we talked about their particular situation with them, they were able to, after we ran some numbers, they were able to eliminate their house payment. Basically, that $1,700 became, their disposable to them, and they were able to get a line of credit established, a considerable line of credit to tap into when they needed to. Now, here's the thing about reverse mortgages people don't know. You don't have to necessarily let your loan negatively amortize. You can always make a payment towards it. You could make your interest payment every single month if you really wanted to, and then only use the negative amortizing aspect of it if you need to. So it's part of planning that you could do, because you just never know when something might come up where maybe your car breaks down, maybe you need new tires, you don't have the money, you don't have the credit card availability. So what are you going to do? Either you miss your house payment or you get tires. So the fact that you have a reverse mortgage allows you flexibility in your life, and I like flexibility. So that's basically what it is. Now, I like to always make sure I tell people that you're still responsible for your property taxes, insurance, HOA, and property upkeep costs. So even though your payment itself is deferred, you still have to make those payments. Now, there's a way to set up what they call a LISA, which is a life expectancy set aside, but I don't know if that's necessarily the best thing. It's usually better if you're responsible to pay it outside of the reverse mortgage. So, but you are still responsible for those costs. That's very important to know. So let's talk a little bit about some of the pros of a reverse mortgage. One of the pros of a reverse mortgage is that it does not need to be repaid during the lifetime of the borrower, so you do not have to repay it. So basically, you're not responsible for your principal balance while you're living in the house. The second thing is that reverse mortgage borrowers get to live in their home until they die or cease living there for a year. And what do I mean by that? That means, let's say you need to go to an assisted living facility. If you cease living in your house for more than 1 year, then the reverse mortgage would become due. And that's not, it's just something to know. And so when you're going through, you get a reverse mortgage, you just make sure that everyone who takes care of you, your beneficiaries, and the people you have set to take care of you are aware of this so that they can plan for that. The next thing is reverse mortgages allow borrowers to receive monthly checks while not making a payment. So there is a possibility to get either a line of credit established. You can get what they call a 10-year payment, and because of my accent, I have a slight accent from Missouri. It's not 10-year, it's tenure, T-E-N-U-R-E, 10-year payment. You have the right to take some 10-year payments from there, or you can get a term payment, which is a set amount of money for a period of time. So you can get cash to help supplement your disposable income. So reverse mortgages can really enhance the quality of life for some people. I mean, really, really, really enhance the quality of life. The next thing is cash payments received from reverse mortgages are generally non-taxable. Neither the borrower nor the heirs will be personally liable if the reverse mortgage balance exceeds the home's value. So if you get a reverse mortgage and you outlive your life expectancy, and all of a sudden your reverse mortgage balance exceeds what the house is worth, neither you nor your heirs are liable for the difference. It's just you're not responsible for it. The heirs will receive remaining equity after the reverse mortgage balance is paid off. So if something happens to you and your heirs sell the house, whatever money is left after the reverse mortgage balance is paid off is theirs. It goes to the estate. It does not go to the bank. It goes to your heirs. So any unused portion is still theirs. And generally, reverse mortgages do not impact Social Security or Medicare payments. And it's important to note that they might have an effect on Medicaid and supplemental security payments. Now, we've had several elder law attorneys and estate planning attorneys explain to us that is probably that the effect on Medicaid is nominal, if non-existent, if you structure the reverse mortgage correctly. Now, a few things to consider about reverse mortgages. FHA limits prevent reverse mortgage lenders from utilizing the full value of some homes. If your home value is above $625,500, then they might not be able to tap into that extra equity when they're determining the reverse mortgage. Outgoing FHA mortgage insurance premium, ongoing FHA reverse mortgage payments. You do have to. It does have mortgage insurance on these reverse mortgages. So it's an FHA product. It's just the way it has to work. Negative amortization causes unpaid principal balance to increase monthly, which decreases the equity available to the heirs, just like we talked about. If you're using basically your equity, so whatever's left will be to the heirs. And the heirs will have to pay out the reverse mortgage in order to keep the house. And that's the way it works with any type of mortgage. But you have to know that. And borrowers that fail to pay their property taxes, homeowners insurance, and HOA payments might lose their home. You have to pay those upkeep charges. So those are the things the pros and things to consider. If you guys want more detail or more information about these, you can go to one of my workshops. As I said, you can call my office 760-692-5950 or email me at michael@frontierloangroup.com. After the break, we're going to talk about short sales and distressed housing. You're listening to the Michael Gaddis Show on AM 1170, The Answer.